All right, so I'm Jason Yarusi. Welcome back to Multifamily Live. Today we wanted to talk about, should we be fearful? There's so much noise out there. There's so many different things that we're hearing all over the news from all these other people on social media. And it creates a lot of noise. We just had, of course, inflation numbers come out. We're up to 9.1%, really over a really hot level of a report right there. And what it's saying is that there's still going to be some rough ripples ahead, right? The Fed is in a tough position. We're probably going to see them increase rates, potentially 75 basis points, maybe even up to a full point just at the end of this month now. But what should we do? Right? What should we do in time of multifamily investing? Should we sit on our hands and not do anything? Well, the answer is no. This is a great time to be investing. While everyone else is running, you want to say, how can I win in this different time? Because if you look at what's happening there, yes, rates are going up. The mortgage, current mortgage rate on a 30-year mortgage is about 5.7%. And if you think about that, just over the course of about a year ago, it was just around 3%. So think of home buyers who have not been able to get in a home. They've seen these prices accelerate. They're out there offering. You're seeing 20, 30 offers out there on a property. Remember, of that property, only one of those 20 or 30 people are able to purchase that property. The others there are still out there looking for a home. But now the home that they're able to purchase has just gotten that much more expensive. It's gone up in price and a mortgage rate of about 60% or so compared to what it was before. So times now are working in our favor because those same people that cannot go out there and afford a home because before they just couldn't find one, they're also sitting on the sidelines thinking or hoping there's a crash coming, right? Which, let me tell you, with the shortage in supply, is probably not on the horizon. And on that same front, we are now seeing rents continue to go up because there's more people having to rent and stay as a renter for longer. Couple this that over the course of the next 5 years, we're going to have about 60 to 70% of the millennials, something like 2/3 of millennials that are going to be ready in that peak buying stage to go out there and find their first home, right? We don't have enough homes. We're going to be shy on units by about 5 million units this decade alone. So if you think about all these reasons here, we think, well, inflation's out there, the Fed's going to be moving rates, it's going to be more costly to buy. Yes, it is going to create some short-term ripples, and it's going to crunch our cash flow into intermediary. But great thing that happens is that inflation typically drives up certain spaces, does very well with certain spaces of real estate, and multifamily real estate is one of those. Why? Because we have short-term leases, so we can adapt to the market. We have leases that are rolling over each month, that are yearly leases, that we can adapt to the market. We can increase our rates to adjust to the changing costs. Plus, with inflation going up, it's hard to now build. And with the cost of building going up, it's making our assets more valuable. However, our debt stays at that same point of where it was. So it brings our equity out on that property. And it allows us to continue to track to increase rents because we are seeing some wage growth that's coupling to allow the people who can't go out there and find a home that are going to stay renting, well, they're going to want good product to rent. And that's where we're going to come in as multifamily providers. So if you can find good, predictable assets in this uncertain time, well, you are going to be well ahead of the game when the tide changes again and everybody's running back to this space.